morning to our esteemed customers. We welcome you to another session of our executive breakfast meeting. And this morning we'll be looking at what transpired in the markets, both for the past week, for both the fixed income and the equities markets. But to begin with, we'll look at the, the activities and all that transpired in the fixed income markets. For the money markets, we saw that funding rates basically in the market saw a decline at the close of the week, and that's largely due to improvement in system liquidity that we witnessed from negative, I think about 300 billion the previous week. We closed last week at the positive 637 billion at the end of the week. So we saw the improvement majorly due to the inflows we got, largely from the FGN coupon payments and from the settlement of the Nigerian Treasury bills maturity, because we had some maturity in the week we had some maturity that came into the market last week. So all those supported the improved liquidity that we witnessed. And on the back of that, we saw that the open buyback rates declined by 158 basis points, while the overnight rate saw a reduction of about 174 basis points to close at 27.67 and 28.17% respectively. And on the back of that, we had an NTB auction last week because we've noticed that for the past, I think for the past 2 to 3 years now, what we've witnessed in the market is when there's a maturity of a bill, such amount is then rolled over to be reissued into the market. So last week we had a maturity of about 583 billion worth of NTB that matured and which was subsequently rolled over. And we saw that the secondary market rather, started the week off on a quiet note, as most of the activities were skewed towards the auction. But post-auction, we saw a mix of both the buy and sell. We'll touch on the auction result very shortly. But then at the auction, we saw that the activities at the auction was quite very large, and the CBN could only take a very little portion of the subscription we saw at the market. So because of that, we saw some people come into the secondary markets to fill their bids. While some people were buying, we also saw some people selling, which was why I had stated that the market witnessed a mixed sentiment throughout the week. But at the end of the week, we saw that the bears actually dominated the market as the average yield increased by 56 basis points to close the week at 25.72. And one thing we can confidently state at this point is that we might begin to see a decline in rates anytime from now, as all indications in the market points to a moderation in yields, both in the fixed income market and in the treasury bills market. We'll touch on why we think that will be the case going forward at the tail of the session. But like I said, we had an NTB auction last week where 583 billion worth of Nigerian treasury bills matured that was rolled over. Subscription we saw at the market was about 2.5 trillion, which was quite large compared to what we've seen in the past 4 to 5 auctions, where average subscription had been hovering around 1.5 trillion. So that's about 1 trillion extra from what we've seen in previous auctions. But at the end of the auction, the CBN could only allot 706 billion at on the 91-day rate remained flat. On the 182-day rate also remained flat. But on the 364-day, despite the increased subscription and the increased allotment, we saw a decline in rates. So that is also to emphasize what I said earlier, that we might begin to see a decline in rate. Ideally, with this level of subscription, we should naturally see an improvement in rates. But some factors are beginning to play out that is now pointing to the fact that the rate decline might be the order of the day in the market. To the bond market, similar sentiment also played out in the bond market last week, but we didn't see much activity at that end of the space because most of the activities were skewed largely towards the money market. Okay, I didn't touch on the OMO auction that also held. On Friday, we had an OMO auction where 500 billion worth of bill was on offer. The subscription was in excess of 700 billion. So most of the activities were skewed towards the money market, while the bond market suffered activities. But notwithstanding, we still saw some major transactions pass through, mostly the short and the mid end of the curve from the 2026, the 2029s, the 31s, and the 33s. Those were the securities that attracted activities for the week. And that's on the back of the last auction that held, I think 2 weeks ago, where we saw that rate on that end of the market was quite improved. So, rate on that end improved. So we saw some people starting to take their profits with the expectation that we might begin to see a moderation. People are just trying to take their profit as early as they can. Okay, interestingly, last week we didn't have this chart. This yield curve, we decided to bring it in this week just to give us a clearer picture of where we started the year and where we are in terms of yield curve. This gray line speaks to where the yield curve closed the year 2023, as you can see, 29th of December 2023. Although the curve was quite flat, but it portrayed a normal curve, what a normal yield curve should be, which is an upward slope from your left to your right. But in 2024, we've seen a misalignment in the yield curve. And what is the major cause of that? The major cause of that is because of the volatility that we currently have in our markets. We've seen interest rates jump from, I think, an average of 18% last year to currently about 27%. Also, we've seen inflation also move from about 22% to 23%. So we've seen most of the activities this year, they've been skewed towards the short to the mid end. That's why we've seen an inverse yield curve. And this also speaks to one of the questions we got last week. How do we see FGN borrowing plan affecting the curve? So as long as we see activities between the short and the mid end of the curve, we expect the curve to remain abnormal. But over time, when we begin to have a stable economy, stable interest rates, stable inflation, we should see things automatically correct itself. So, but for now, while we're still experiencing all that we're currently going through, I think the yield curve would still remain in this abnormal form, in abnormal shape. And that's to tell us that most of the activities we should be looking at should be at the short end so that we can easily amend or adjust ourselves to changes in interest rates and hopefully changes in inflation as well. For last week, we saw a major twist, of event rather, we saw a significant improvement in our foreign exchange markets, where Naira improved from 1,672 Naira 69 cover at the official window to 1,605 Naira at 30 cover. And that represents a 67 Naira 39 cover decline from where it closed the previous week. Although we really cannot authoritatively confirm what led to the bullish run, as we saw a major bullish run, I think on Wednesday, Thursday, and Friday. Some analysts in the market, they've attributed it to the new EMES window by the CBN, where FX would now be traded. Some people have said that due to the Eurobond auction that held last week and the subscription of about $2.2 billion that we saw, that is really what's sending some sentiment or shivers down the spine of speculators who are now trying to quickly offload their position because they believe the CBN now has enough ammunition to support or defend the Naira in the short while. But all these are still theories that we really can't substantiate. But we believe that in the next few weeks, maybe this week, next week, when our trading continues on the new portal, we'll be able to tell if truly it is the new trading portal that has led to the massive gain that we've seen in Naira, or it is just the usual sentiment in the market that led to all we saw. But the summary of what we saw in the foreign exchange market was the Naira improved across board, both at the official window and at the forward contracts market as well. But we'll continue to give us that update from time to time to see how the Naira is trading in the market. So quickly to our expectation for the week. This week, we expect that there will be a major outflow as there's another NTB auction holding this week on Wednesday. I think about 275 billion worth of bill would be on offer. We expect that would also mop up liquidity in the market, but that will be barring any significant inflow into the system. I do not think there's any major inflow we're expecting. The next FGN coupon will be paid next week. So we expect that the rate might slightly improve from where it is. And for the FGN secondary bond market, we still expect to trade in line with system liquidity. And since we have more activities skewed towards the money market, we expect that the activities will be quite minimal there, while most of the investors would try to take advantage of the offerings in the money market space. While for the Treasury bill secondary market, we expect that the market will trade quietly at the start of the week, while investors try to see how this week's auction will play out. But considering that the CBN, we're already rounding off the year, I think the Debt Management Office and the CBN, they've been able to significantly achieve their borrowing plan for the year. So we are likely to see a slowdown in the activities for the rest of the year, coupled with the recent FGN Eurobond that was raised last week. So we expect that their appetite towards raising funds would reduce, and we should see less aggression on their end. So all these factors put together, we expect that rates will start to come down, which is why we believe that every average investor should key in into their portfolio, so key into the opportunity we currently have, as we might not have that in a couple of weeks to come. And how do we take advantage of that? Our various product offerings gives us that opportunity from our lead fixed income fund, which is a strictly fixed income market, whereby you get to invest in fixed income instruments from the money market to the fixed income market. It gives you an opportunity to put in those little funds that you have in your bank that are yielding no interest. I think the average yield on this is currently around 17.95%. That's almost 18%, which I strongly believe would be a very good avenue for you to put your money to work. For the lead balance fund, we are getting to the beginning of a new year. It is expected that at the start of the year, we'll see some activities around the equities market, coupled with the yields level we currently have in the fixed income market. I think this fund is also a very good fund for those that want a mix of both equities and fixed income in their books. For our lead dollar fund is a strictly dollar-based fund that invests in fixed income instruments, has a minimum holding period of 180 days, and the yield is very, very attractive. We would also continue to emphasize that as of now, we are still the market leader in terms of yield, which means that when you put your money in this fund, you are better off than being anywhere else. And also our fixed income products, where you get to place your fund for on a tenor basis from as low as 90 days to as high as 365 days. So all these areas of products, they give you the opportunity to key into the current happenings in the market and enjoy the dividend of investing. So very quickly, we'll look at what transpired in the equities market, and then we'll take questions and answers by then.
So thank you, Mr. Sam, for that wonderful presentation. And thank you, our amiable audience. Really appreciate you for always being there for us. And on a quick one, what happened last week? Out of the 5 trading days that we had last week, the bull took 3 out of the 5 and the bear had 2. So next slide, let's quickly move because of our time. And let me tell us what happened last week. That was the first time that the market capitalization appreciated to the tune of 59.53 trillion. So that happened. The last time that the market was able to get to that peak was the 12th week. That was in the month of March that the market was able to get to that 59.134. So ever since then, the market has lost nothing less than 4 trillion. And until 42 week after Ade was listed, that is when the market was able to close that gap. And we saw for the last trading week, that was last week, the market was able to get to that peak of 59 trillion naira. And what transpired is that we saw the sectors under our coverage, from the banking sectors, the insurance, industrials, the manufacturers, and the oil and gas sectors did wonderfully well last week. And all our sectors performed well. So last week was the 49th week. And out of those weeks, the bear still dominate the market. Now, out of the week that we already have, the bear at 25 week, they have 125 week, where the bear took 24 week. That means that throughout the year, we have missed trading, that nobody dominated the market all through the year. And we just have 3 weeks left. I just want to project to us that what are the opportunities in the market? What should the clients be doing now? We have seen what my colleague said, that this is the best time. This is the wonderful time for you to take advantage of the high interest rate in all our products. So we have a race of products. If you make enough gain in equity space, why can't you take your profit, come over to all our product that we have, and then you can maximize the opportunity in the market. So let's go to the next slide. If you can see what happened, let's just compare the inflation rate. We saw that in the first quarter, the market had a return of 39.84. That was the best time. We saw a lot of banks came out, they declared profit, and that period, a lot of inflows came into the country. So for people that are local investors, what we'll have done is that if somebody invested in the till end of the year, that is December, you came in, you already invested, and before foreign investors came in January and they invested. So we saw what happened, that the return year to date, the market went as high 39.84, far above inflation rate 33.2 that period. So that was the best period for people to take advantage. If you already have profit, take out your profit, invest in all our products, and you have made it profit. And we also saw what happened, that after that first quarter, the market lost the momentum that it has already gained. And we saw that ever since, the market has not been able to rise above the inflation rate. And even up to now, what we had last week was that year to date, the market has returned 30.60. We are still far below the inflation rate. To the next slide. So this is what happened. This is the presentations of the inflow to the country. If you look at the first quarters, that was when we have each foreign investment coming into the country. And compared to what we have now, it's very minimal. The last quarter, which is the fourth quarter now, majority of the funds that came in early in the year have been repatriated back to their country. So this is the advantage for people now. If you want to come in, please take advantage of the market now. Be ready, come in. First quarter, you can move out, invest in another array of products that we have. Move to the next slide. So this is what happened. Last year, we just had the presentations of sectoral performance. What happened December last year? Top of the sectors was oil and gas, followed by banking sectors, the consumer sectors, insurance sectors, the pensions, and industrial sector. I told people investment is just like a lift. Look at the sectors you are going in, and the sectors will be able to take you above inflation rate. And that's what we saw December. And come here now, December, the same thing is playing out also, that the oil and gas always be on top of the sectors. But the only sector that is missing is just the banking sectors that is below the ladder now as a result of the recapitalization. But in terms of performance, the banking sectors are still best sectors. In GDP, they contributed most. The financial sector and the service sectors are still dominating activities in the economy. But what we saw now is that January, what happened? Last year, industrial was below the ladder. Early last year, December. That could have been an opportunity for investors that want to plan that. Where should I go 2024? If anybody key into industrial sector, that means that person invested in Dangote Cement or invested in WAPO or Boa Cement or other sectors. January, we saw what happened, that industrial sectors went high as a result of Otedola investing in that sectors. And we know what will happen very early in the year. The billionaire, they have to do their evaluation early year so that we know the person dominating that space. Industrial sectors top that sectors, and they are far above inflation. Inflation in January was 29.90, and we saw that among all the sectors, it was only the industrial sector that was far above inflation. So this is what we advise our clients. Anytime that you have opportunity, that capital appreciation, don't be greedy. Take your profit. If you are not taking the capital or the appreciation that you had, take it to other sectors. And if anybody in January say that, okay, I made profit in industrial sectors, let me come back. to oil and gas and invest in oil and gas, or the banking sector that was in negative early in the year, what could have happened to that person? And what we are seeing now in December, year to date now, the banking sectors from the fourth position climbed above all. So that person is already in profit. And this is what we are doing, that we have a race of products, whether equity, our fees, our lead fees income, or our balance fund, even dollar fund. When we started, dollar was at 890, but now we saw what is happening currently. So we have product for our clients so that they can key it in and then maximize their profit. And this is what will happen this year. Apart from the banking sectors, there is still opportunity for people to key into that sectors. And next slide, you see our recommendations. Next slide. So you can see currently ongoing, we have Right by First Bank, UBA. We saw the yield, and we recommend people to buy. What we told people, Access Bank, Fidelity, we told our clients to buy. This is what you are doing. You buy the offer, you also buy in the market. So this is what will happen. Once the price, you saw price, first Fidelity came to the market at 9.50 naira and 9.95 naira. If anyone has invested now, Fidelity closed 16 naira. So this is what we are saying. You have made each profit, then you sell out and you replace back with the offer that you have invested in. So we are recommending people now, take advantage of the First Bank, right? It's still undervalued, buy it. For the UBA, we told our clients, fill the form while we track the market. We see how it plays out, whether to buy from the market or you pick the right offer. So for First Bank, it's closing on the 12th, that is Thursday. Please, let's fill our forms and take that opportunity. Next slide. So our expectation for the week, as we have seen that despite the auction that we saw in Eurobond, in the Treasury bill, the market was able to weather the storms and be able to, it came out stronger, returning, getting to the highest peak of 59.4 trillion, what we have not seen throughout the year. So our expectation is that the buy interest now will kick in. People will start taking position against the final year result that will be released as the year closes. So we expect the bull to dominate the week for the remaining part of the week. So our expectation is that the market will close positive this week if there are no sell interest. So our recommendations are still there. Let's go to our recommendations. Next slide. So our recommendation, Access Banks 1 to 24, First Bank, GTB, UCAP, Stanley, Stanbic IBTC, Zenith Bank, Aiko, Custodia, Mazda, NEM, Boa Cement. We cover all the sectors. All these are still valid for our client to invest in. Let's take position for Dangote, Guinness, Flour Mill, Nestle, Airtel Africa, MTN, Cadbury, Eternal, all they are on hold. And for our sell recommendation is corn oil. It's currently overvalued. The review also is overvalued. Transcorp Hotel is also overvalued. So we take people to take position, sell, and come and invest in our products. So we've come to the end of the equity market review, and the floor is open for questions. If you have questions, if there are questions, the floor is open for questions. Let's signify by raising of hands. Okay, we do that. We do that. So there's a questions.
Okay, can you send a 52-week foreign exchange charts? Sorry. Okay, we have some questions here. Okay, can you send the 52-week foreign exchange chart to us? Trending that in the chart to make the interpretation easier for investors. Okay, I guess you meant possibly we can have more like an historical or the historical foreign exchange trend. I guess that's what this question is speaking to. So yes, we can make it available just to show us. We can even put it in form of a chart so it can tell us the direction the foreign exchange or the exchange rate has been so far this year. Okay, another question. With the decline in dollar to naira, okay, with the decline in dollar to naira, is the lead dollar fund still a good product to have in my portfolio? Absolutely yes, because one of the reasons why we encourage people to invest in dollar products, one is for diversification, so that you don't just leave all your products in a particular currency. It's expected that you're able to diversify your portfolio so that you can get to edge against any shock that we might likely have. And like my colleague mentioned when he was taking the equities market report, he said when some people invested in the dollar fund, naira was roughly around under 700, 800 naira. And with naira currently at 1,600, I'm very sure those people in that category, they would have been very, very grateful that they made that decision to diversify at the time. So one, the expectation is not that the naira will continue to depreciate, but we expect that for every rational investor, having to edge your investments across different sectors, different currencies, different opportunities, basically, it gives you the opportunity to get better return. While you're getting your return in naira, the dollar returns is also something that would contribute significantly to your portfolio. We have another question. What are such companies you have under pension sector?
So there are stocks that comply with PenCom, at least the banking sectors and some of the insurance sectors. So there is a yardstick for that. So we send that to Mr. Ashadi after the program. We give you the stocks under that coverage. So another question from Mr. Gbenga: what is your view on the purchase of UBA and First Bank? We've said that for the First Bank is good to go, but for the UBA, we told our client that they should fill the form while we track what is happening in the market. Currently, the price of the trading at the market is very low compared to what they are offering. They are offering at 35 naira, and we have seen the price going as low as 32, 31. So what we are telling our clients is that for people that want to increase their holdings, they should fill the form, send money to us while we can pick it from the market when the price is lower. And then if the price should go up, we then submit the form. But currently now the price is still lower. We told client to send in their money, fill the form, and we can take it at the market depending on the outcome of the offer. So we have a question with Mr. IOA wants to ask questions. You are muted, sir. You can speak. You are muted, sir. You can speak, sir. Sir, unmute. You can speak. Unmute, sir. IAO. Sir, you can unmute, sir. Okay. So you have the floor, sir. Okay. So thank you, our audience. If there are no more questions, we really appreciate your time out for always being there for us. And we always promise to give you the best information that you need to take the right decision, investment decision. Now we promise to always be there for you in terms of all our products, in terms of all our service. We give you the best, and we wish you a very profitable week ahead. So thank you for being a wonderful audience. Do have a great week ahead. Thanks.